It's too late to buy gold if you believe the ZP lie. Instead, buy silver. That's my answer. Silver is way too cheap. It would have to be $200 an ounce just to get back to the CP lie. Our prices are so much lower than that, and then they could go as high as $2,000 an ounce, which is crazy. But this is what the numbers show. Yes. Yeah, and I think that $200 an ounce is a very doable price in a hurry, and there will be a hurry. There are very few times in history when gold not only becomes the safest asset because it's insurance, but it also becomes the asset type that could gain the most value. This shows that we are in one of those right now. People from our field are also going, so it's not just people from the West who are buying. What's making this happen? That's it. China, that's it. Everything is being bought. Hello, this is Mike and Alan with the Gold Silver Show. Hey Alan, how are you? I'm fine. Mike? Thanks. Today we're going to talk about gold and silver. To start, I'd like to show you a tweet from David Bateman. What I put into rare metals about a year ago for $800 million is now worth $1.2 billion, he said. So a 50% rise with no debt will make more billionaires, but only those who are not afraid. Mike, what do you think? In a year, he's gained 50%. That's pretty good. But its last sentence is only for the brave and golden. You can put your money in these safe investments without worrying about the other person. No risk of the other side. It's now. A few of my friends are reporters for our newspaper and write about things like the economy and other things. They talk about how to get your gold back, which is similar to what we do. While this is a great return, there is some risk involved with the given return. So they're talking about something that puts your actual gold at risk with another person, which I don't see why you would want to do when you can get such a great return. That much time has passed and nothing else has done this. This is very important, and you know that. I said in my first book, and I think I said it again in my second book, that every once in a while, gold not only becomes the safest asset because it's insurance, but it also becomes the asset class that has the biggest potential gains in purchasing power. This shows that we are in one of those times right now. David Bateman, I thank you because you proved my first book, which I wrote from 2004 to 2007. You've shown me, right? Thanks, David. A lot of people then want to know if it's too late to get into gold, why or why not. Here. David Ingalls says that the price of gold has gone above the price set 45 years ago, taking inflation into account. Does the bull run end now or does it go on? It depends on which inflation measure you use and what was going on in 1980. There were a lot of geopolitical parallels between wars and, a lot of things. The only difference is that debt to GDP was about 30% in 1980, not 12% or whatever it is now. I'm sorry, but I can't remember the exact number right now. Things are getting worse in society and the country looks like it's coming apart. On top of that, there's always the chance of World War III happening. And then you read the book. Back in 1980, we wrote about the great gold and silver rush of the 21st century. 10% of the world's people drove the price of gold from $35 an ounce to $873 an ounce in just one day. At first, it was only Western Europe and Canada, but on January 1st, 1975, the US joined the party. On January 1st, 1976, Australia joined the party too. But for most people in the world, it was illegal to do so. They couldn't buy gold anywhere, and there were no exchanges that could change the price around the world. That is, even if you lived in a place where it was allowed, everyone there was poor, like in South America, Africa, or those other places. There are no trades. So you might be able to buy gold from someone else in Russia, the USSR, or one of the other Eastern Bloc countries. It was not allowed. In China under Mao, it was against the law. Putting money into gold was against the law there. India did not let people buy gold, but they did let people buy jewelry and coins. Because of this, most of the world couldn't take part in today. We did a study and took into account things like population growth and found that there are 18 times more people who can legally buy and afford gold and silver than there were before. On top of that, there is 55 times as much money in circulation, but only twice as much gold is available. What does all of this mean? Even if you? Yeah, get rid of the 18 times more people, 55 times more money, and twice as much gold. That's 25 times as much buying power coming at it this time. And this fake, useless money system has probably built up a lot of energy that will lead to a much bigger crisis. That is wrong and should be against the law. I agree with everything. Also, you asked me before the show to add a different chart of gold prices adjusted for inflation. So I made this picture before, taking into account the CPI. As we just saw on the last slide, we're pretty much at that record high point. What if you don't use the fake government CPI numbers and instead use the real numbers that the government used? Then the gold price should be around 33,34,000 an ounce at its highest point. So the question is it too late for me? You have to choose one of these two sets of government numbers. John Williams of Shadow Stats Government Statistics did not come up with this idea on his own. It's not crazy plot theories. It's both the old way the government used to figure out inflation and the new way they change it every 2 years. They change something about how they figure the CPI, which saves them a lot of money by denying people their social security benefits and other benefits. Also, any money that the government sends them is adjusted for inflation. The government would lose a lot of money with the new CPI compared to the old one. In order to get fortune, pick a number between $3,500 and $33,340,000. This is because we can round and the chart is about a month old. Okay, so the goal of the bull marketing is still not over. That's not at all what you should make of it. These facts should be put together with what I said about 18 times as many people and 55 times as much money. China and Russia had nothing to do with the last rising market. It was against the law, so this time is very different. Okay, now we're done. If you're telling the CP lie that you think it's too late to buy gold, then buy silver. That's why I say silver is so cheap. You would have to be $200 an ounce just to get back to the CP lie. That's so much more than what we have now, and then it could go as high as $2,000 an ounce, which is crazy. But this is what the numbers show. Yes. Yeah, I agree. I think that $200 an ounce is a very doable price in a hurry, and there will be a hurry. It looks like most of the people watching this have seen my bubble movie from a few weeks ago. Take a look at the US market. Things are very close to going wrong, and I think the next thing that happens will be one of the worst crashes ever. The only way for them to stop it is to make a lot of money. Just so you know, it's been about money. Bernanke changed everything, and the printing will only make the price of gold go up even more. Yes, that's right. Yes. So based on inflation, the bull market is still going strong. In a previous video, we even guessed that the bull market would continue because of real interest rates, specifically negative real interest rates. We talked about this chart here, Mike, where we showed that the two gold bull markets, which are shown in red boxes, are linked to the stalactites, which are negative real interest rates. In other words, that's the Fed funds rate minus the CPI. Okay, so I asked you to do a few special things. Yes, you did say, well, what if we change this, not based on the CP Live, but on the Shadow Stats CPI instead? That would probably be more accurate. It's the old numbers from the government. So that's what I did, and that's the black line here. For decades, you can see how really, really, really negatively real interest rates are. Wow. The dark line here shows where the middle point is between the two. That means it's in the middle of the CPI and the Shadow Stats CPI. In the middle. That being said, I think it makes sense when you think about the inflation that happened after COVID ended and all the money from the stimulus checks stopped being hidden. That inflation was real and people were feeling it. How much more does dinner cost? How much more does it cost to shop at the store and other places? That dark line in the middle makes some sense to me. Yes, because the real interest rate in red, the real rate changed by the CP lie, doesn't match what I've seen in real life. Yes. Yes. I think the gray line is somewhere in the middle, but no matter which measure you use, we have negative rates, negative real rates. I want to look at before you go on though, if you look closely, you can see that the gray line in the 1990s is close to zero, and the red box starts right where the gray line drops below zero. This is exactly where the gold bull market began. Wow. All right, you can now move on. That makes sense, as well as a follow-up question. What's going to happen with interest rates? Are they going to keep being nasty or change their minds? To answer your question, I'll show you this table from the CME Fed Funds Futures tool. The blue boxes show that we're going to the left as we look ahead to the Fed meetings in October and December, and then a lot of them in 2026. As we go down this table, we move to the left. This basically means that all of the Fed Funds Futures buyers are betting real money on where they think interest rates will go. All of them are betting that over the next 12 to 18 months, the Federal Reserve will keep lowering interest rates. In other words, they believe that real interest rates are going down. Without a doubt, are going to fall. Things are going to get worse for them. In other words, the gold bull market is likely to last for at least another 15 to 18 months. Okay, and we did look at this before we started the movie. One of the reasons we did that was to make sure we could explain it to everyone, because I hate tables. I enjoy charts. I don't like tables, but there's a column that's missing. Will they leave everything alone? If there was another column there, that would mean they weren't going to cut rates.